In today's video, we dive into some exciting developments about AMC and the evolving dynamics surrounding short sellers, OBV accumulation, and institutional strategies. The narrative continues to unfold as institutions and market players adjust their positions. From hedge funds declaring bankruptcy to the implications of Virtu Financial quietly buying AMC shares, there's much to unpack. Let's begin with an intriguing detail. Doug Cifu and Virtu Financial hedging long positions on AMC. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But everyone remember, this is not a financial advice video. Doug Cifu, a name we've discussed before, has been outspoken about AMC, often criticizing its potential and fundamentals. Yet actions speak louder than words. Virtu Financial disclosed a position in AMC during the third quarter, signaling a notable shift. Despite Cifu's history of negative commentary on AMC, this move indicates underlying concerns or perhaps even a realization of AMC's potential. This is reminiscent of past scenarios involving Citadel, Credit Suisse, and UBS, where firms that were heavily short on AMC shifted their strategies, potentially as a hedge against the unknown. Why would a firm like Virtu, previously skeptical about AMC, make such a move? It boils down to risk management. Over-leveraged short positions create vulnerabilities, especially when market conditions turn unfavorable. If these shorts don't hedge their positions, they risk a significant upward price movement in AMC, which could lead to devastating losses. This pattern is not new, but its implications grow more severe as the stakes increase. Looking at the broader picture, institutional ownership of AMC has been steadily increasing. Despite media narratives attempting to portray AMC as a bad investment, the numbers tell a different story. Institutions are buying AMC shares, and even those with significant short positions are hedging by going long. This contradiction between media messaging and institutional behavior speaks volumes about the true dynamics at play. Now let's talk about the on-balance volume OBV metric, which continues to follow a trend reminiscent of 2020, only on a much larger scale. For those unfamiliar, OBV measures the flow of volume in and out of a stock. A rising OBV indicates accumulation, meaning investors are buying and holding. The current OBV trend shows significant accumulation in AMC, even exceeding the patterns observed during the 2020 run. This suggests a larger float, more synthetic shares in the market, and increased investor interest. As more synthetic shares are created and purchased, the eventual short squeeze could result in even higher price levels. The implications of this are profound. Shorts not only have to cover their original positions, but also the growing number of synthetic shares. This cycle puts immense pressure on short sellers, making the potential for a squeeze even greater. Shifting focus to the broader market, recent developments have highlighted the precarious position of some short-selling firms. For instance, a U.S.-based firm operating in Dubai filed for Chapter 15 bankruptcy following $126 million in naked short trade losses. This case has sparked federal investigations into collusion and unethical practices among short sellers. The tactics used by these firms often rely on market manipulation rather than genuine skill. When their ability to manipulate is curtailed, their over-leveraged positions quickly become liabilities. Kristen Shognessy's recent tweet brought attention to the risks faced by brokerage platforms due to over-leveraged traders. Interactive Brokers, for example, faced a $91 million trading freeze in Hong Kong. This situation underscores the domino effect that over-leveraged positions can create, impacting not just hedge funds but also the brokers facilitating these trades. A deleted post from Interactive Brokers revealed concerns about inflated equity prices and the potential fallout if these prices decline too rapidly. The acknowledgement of such risks further illustrates the fragile state of the market. The narrative around AMC also ties into broader regulatory discussions. With renewed focus on naked short selling and increasing pressure for stricter regulations, the equity market is at a critical juncture. Firms that have relied on unethical tactics to sustain their positions are now facing the consequences. Margin calls and liquidations are becoming more likely, and the ripple effects could lead to a wave of bankruptcies among over-leveraged firms. Looking ahead, the involvement of influential figures like Elon Musk and policymakers who oppose naked short selling could accelerate changes in market dynamics. If stricter regulations are implemented, the potential for real price discovery in stocks like AMC and GME increases. This would expose the true value of these stocks, untainted by manipulation. Interestingly, there's speculation about the interconnected nature of AMC, GME, and other stocks like DJT. The idea is that these stocks share common short sellers, so a squeeze in one could trigger similar movements in the others. For example, if DJT experiences a significant upward price movement, the resulting liquidations could impact AMC and GME, creating a cascading effect. Speaking of GME, the company's strong cash position and profitability are noteworthy. Unlike many other meme stocks, GME has demonstrated financial resilience, making it a more stable investment. The increasing volume of call options on GME suggests growing interest from retail investors, which could further drive its momentum. Returning to AMC, the recent surge in negative media coverage aligns with these developments. As short sellers and institutions scramble to manage their positions, media outlets often amplify fear, uncertainty, and doubt to sway retail sentiment. However, the underlying fundamentals of AMC tell a different story. The company continues to improve its financial position and operational efficiency, countering the bearish narratives. In conclusion, the dynamics surrounding AMC, GME, and other stocks in this ecosystem are complex and ever-evolving. The interplay of institutional strategies, regulatory changes, and retail investor activity creates a volatile but potentially rewarding environment. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.